Please help this channel grow by hitting like and subscribe.
Hey, welcome back. So today, we're putting on the lab coats and giving the electric vehicle maker NIO a full technical health check. We're going to dive deep into the charts, check all its vital signs, measure its energy levels, and then give you a really clear, data-driven diagnosis of what's going on.
All right, so let's cut right to the chase. The big question is, just how healthy is NIO's stock right now? If we're only looking at the technicals, the charts, is this thing in good shape, or are we seeing some major warning signs?
And, well, the answer is, honestly, it's a bit of a shocker. We looked at 10 key technical indicators for this health check. And you know how many of them came back positive or bullish? Yeah. 0. A big fat 0. So let's scrub in and figure out what is going on here.
Okay, first things first, we're checking the vitals, and that means starting with the most basic thing of all, the long-term trend. This is like taking its temperature. It gives us that crucial baseline reading of its overall health.
So, the first test we run is looking at the moving average. You can think of this as the stock's long-term heartbeat, right? A healthy stock, one that's growing, is going to stay above this line pretty consistently. But when a stock is trading below it, well, that's like a patient whose temperature just won't come up to normal. It's a huge red flag that something's not right.
And here's where the problem really comes into focus. Look at this. NIO's current price isn't just below one average. It's below both its 50-day and its critical 200-day average. For traders, this is a textbook bearish signal. It's basically the chart screaming that sellers have taken over. And it doesn't stop there. To confirm that diagnosis, we've got another indicator, the parabolic SAR. It just flipped to a sell signal. What that means is there's now this huge ceiling right over the stock's head at $5.40. I mean, it would take an absolutely massive burst of energy for the price to even get close to that level.
But here's the interesting part. Even though the trend is clearly down, the pulse of that trend is actually pretty weak. We use something called the ADX to measure trend strength, and it's way down at 14.57. So what does that tell us? It means this isn't some kind of panicked free-fall crash. It's more of a slow, grinding decline that just doesn't have much energy behind it right now.
All right, we've checked the long-term vitals. Now let's zoom in and measure the stock's current energy levels. We're talking about momentum. Is it building up for a comeback, or is it just running out of gas? To do that, we look at the RSI, the Relative Strength Index. The best way to think about this is like an EKG for the stock's energy. If the line's going up, it's getting stronger. If the line's going down, it's getting weaker. And usually, when it changes fast.
And wow, this slide really shows you how bad it is. Just look at how quickly things have gone downhill. Less than a week ago, the RSI was looking strong. Now, it has absolutely plunged over 21 points into weak territory. That's not just a sign of selling pressure, it's a sign that the selling is actually picking up steam.
Okay, another key test for momentum is something called the MACD crossover. This is a huge one. It's a symptom that pretty much every technical trader keeps an eye on. See, when that fast line crosses below the slow line, it's like a big flashing sign that momentum has officially flipped from the buyers to the sellers. And guess what? For NIO, this isn't something that might happen. It just happened. We just got that key sell signal. The MACD has officially crossed over to the dark side, which just doubles down on what the RSI was telling us. Short-term momentum, it belongs to the bears now, no question.
Okay, so we've run the test, we've checked the vitals. Now it's time for the diagnosis and the prognosis. And to do that, we have to look at the key levels to watch. These are the make-or-break prices for the stock.
So if there's any hope of a recovery here, NIO has to climb this, well, let's call it the stairs of resistance. And each step is a major battle. Step 1, it's got to get back above 492. Step 2, it has to conquer 509. And the final boss, step 3, is breaking through that huge wall at 525, which you'll remember is right where that 200-day average is waiting.
This patient's chart, right here, basically lays out the whole battlefield. The stock is pinned at 472. If it falls, its first line of defense, the near-term support, is around 450. But if that breaks, look out below, because it could fall fast to that critical low of 438. And on the flip side, if it tries to rally, it's going to immediately slam into a wall of resistance starting at 492. It's really stuck between a rock and a hard place.
So, we've looked at the vitals, we've measured the energy, we've mapped out the key levels. What's the final verdict? What's the consensus diagnosis from all of our technical tools?
And the results are, well, they couldn't be clearer. Out of 10 indicators, 6 are flat out bearish. 4 are just neutral, kind of sitting on the fence. But the most important number is that last one. Bullish signals, 0. Just like we said at the start. From a purely technical point of view, there are simply no signs of life here at all.
And when you have that kind of overwhelming consensus, it leads the technical models to a pretty blunt conclusion. The forecast is simple. Because NIO has so many negative signals and it's stuck in a falling trend, you really can't have anything but a negative evaluation of the stock right now. The data just doesn't support anything else. So that leaves us with one last, really important question to think about. The technicals are telling a very, very clear story of weakness. So what could possibly change that? What kind of news, what kind of catalyst out there in the real world could be powerful enough to completely ignore this chart and rewrite the entire story? That's the real question.
The content in this video is for entertainment and educational purposes only and should not be considered financial advice. All investments involve risk, including the loss of principal. Please do your own research or consult with a professional before making any financial decisions.